Hey, it's Eric Hatch with Century 21, coming from the beautiful Sierra Foothills, and today we are so honored to have a special guest with us, Emelia Marini from American Pacific Mortgage. And I know a lot of people are asking me questions about, hey, what's going on with the market? What's going on with interest rates? How can I afford a house anymore? And so what we decided to do, bring in the experts. We can talk a little bit about her. So go ahead. Know about you.
Yep. Hi, everybody. I'm Emelia Marini with American Pacific Mortgage here in Nevada County. I've been doing mortgages for about 7 years now, and I'm one of the top producers in the area, top 1% in the nation, actually. So I do a lot of loans, and I see a lot of different scenarios, talk with a lot of different people, and I know you all have questions about what the market's doing, what interest rates are doing, and I'm here to answer them for you.
That's fantastic. So let's go ahead and discuss, is the world ending because we have super high interest rates?
No, the sky is not falling. This is cyclical. Markets change. There's always opportunity when the market's changing for different people. So you've had sellers who have really had the upper hand over the last couple of years, and it's shifting. Borrowers are now having more control over the process. They're having more options. They're getting more concessions from sellers. It's actually a really great time to be a buyer. They're having opportunities that they haven't been able to have over the last couple of years. So it's actually not a bad time at all.
I love that. You guys have been hearing from me for several months. Buy. But now, Emelia today has said we need to buy a house. And I know I've shared this with you before. When I purchased my home in 1995, I thought, where would the prices be in 10 years? And I thought, boy, were they going to be staying the same? And so we got to kind of look at that too. It's just not all about this higher interest rate. It's about kind of coming together and looking at all other aspects. And what you just shared about the seller concessions, explain a little bit about what that means.
Yes, what we're seeing in today's market is that a lot of buyers are offering less than asking price. They're getting more seller concessions in that way on price. Another way that buyers are taking advantage of this market is they're asking for the seller to give a credit. And what that is the seller gives you a certain amount of money at close of escrow to help you pay for your closing costs. And one of your closing costs can also be to buy down your interest rate. So if you're very sensitive to interest rate and you like a lower number, a lot of times your agent can help negotiate a seller credit to help you cover the cost of getting that rate down a little bit for yourself.
And I love that. And that's so important to understand, is that in the last several years, we've just been getting this credit for helping with other issues, closing costs, repairs and everything. But now, because it's a shifting market, we're seeing that so more and more. It's so true of asking the seller to, hey, can you give me and help me out with getting a little bit lower, which is about 1/4%.
Yeah.
Kind of where they're at. So that's still...
It helps. Every little bit helps. Absolutely. No, it's a great time to put in an offer and negotiate. That's what this time's about right now for buyers, is being able to negotiate.
Yep. And I love that because now we have more inventory, a shifting market that we're looking at going and able to ask more from a seller and kind of a buyer shift to be able to say, hey, buyers, it's your turn now to come in and get a home. I have sold some screaming deals in the last couple weeks. Now, yes, some of the other prices you're saying, well, yeah, maybe that's a little bit high, but look at this house over here and look at this house over there. That there are some screaming deals right now. There are sellers that realize and understand that it is a shifting market, so they're going, I want to price my house accordingly. So jump on those, right?
People have to move. A lot of times sellers have to move. They don't have an option. And when that's the case, you can look for those longer days on market. I know you monitor that closely and see if maybe there's a deal that might be had that you couldn't have gotten even 6 months ago.
So let's go in a little bit about some assistance programs. So a lot of people come to me and go, hey, I don't have a lot of money down. Can I buy a house? Let's discuss zero money down. Is that even possible?
It is possible, and I actually do them quite often. There's actually a couple of different programs that we use, and what they do is they allow you to borrow your down payment, and they'll actually allow you to borrow your closing costs too. So we're able to get people into homes with really very little money down, if any. So they're wonderful programs. They do require a 680 credit score in most situations. So, if your credit's a little bit challenged, that's something that I love to work with people on, is getting that credit score up and getting you into a house. So don't let that stop you. If you are not quite there yet, we can get you there.
Perfect. And I think that's real important. I've had several first-time home buyers call me in the last week, and they're saying, where do I start? Yeah. And really where you start is you choose an agent that you feel like that you have a good rapport and you can have a working relationship. Somebody who's got experience with the first-time home buyers or even experience at all about selling houses. The second thing they need to do is find you.
Yes.
And find a lender who'll be able to run some numbers by, because it's not always about the interest rate, it's about the
value.
Value.
Payment, absolutely. Yeah. And you can't really trust online calculators so much either. So if you're out there doing your own searches, you really need to talk to a local expert. Our property tax rates are a little bit different. Our insurance costs are a little bit different. So you really need to talk with somebody that you trust that knows this specific market to run those calculations for you, so that you're not surprised when it comes to that payment and you've already had an accepted offer. So definitely ahead of time is when you want to do that.
And I love when you said about the local expert, because that's so important. I know there's a lot of lenders that are out there that are national lenders, and there's some good companies too, but for me to be able to say, you know, I have a concern, I have a question, I need to talk to my lender, and I can pick up the phone and call you directly, and you actually answer the phone, I can chat with you, versus going through a call center and talking to maybe somebody different every single time.
That's absolutely right. After hours, weekends, we're always working. When we're a local expert, we're here for you. You don't get that with an online company in any way. So you kind of get passed around. If there's a problem, you might not even know what that problem is. So it's really important to have somebody that you trust. It's also really important to have a strong offer, because if you go with an online lender, a lot of times sellers agents don't like that so much. They know those deals don't go through as often. So when they see a local lender that they trust on your pre-qual letter, there's a much greater chance you're going to get your accepted offer.
So another question I have for you is, when a buyer calls you, what's one of the first questions that they're asking you?
Well, most of the buyers that call me are really concerned with their monthly payment. They want to know what their out-of-pocket monthly expense is going to be. So it's pretty easy to do some calculations for you, but we always want to think about a few things when we're talking about monthly payment. It's not just your mortgage payment. So you have your mortgage payment, principal and interest, and then you're also going to have your monthly property taxes and insurance costs as well. And when I talk about monthly payments, I always include those, because you don't want to be surprised later when your payment's more than just the mortgage payment. So it's really important to look at the whole picture when you're talking about that.
So kind of in wrapping all this up, so we've got some higher interest rates. We can ask some sellers for some additional credits to help buy that down. We can get some first-time home buyer assistant program out there, some monies and grants and different things. And then we can just be more aggressive with the seller, really, and be able to put this together, and then concentrate more on the monthly payment to be able to feel more comfortable. Yes, some of us are now looking at maybe not stretching as much, and maybe you're looking at a certain price range and you have to come down a little bit in a price range, but they're still affordable houses, because I see some housing prices kind of going down that direction as well.
I'm seeing that as well, absolutely. Good. So yeah, what you could have gotten last year for $550, maybe you're in the $400,000 range, and it makes a big difference. Even though rates are up, that payment can be lower, so that's a good thing. And the other thing to think about is it's life. You know, that there's the market, there's interest rates, there's prices that go up and down. But when it comes down to it, what you're looking for is a home, and you're looking for a safe place to be. And that is really what's important. And that's important in any market. So rates go up, rates come down, you'll refinance out of a high interest rate when it's time. But really what's important is life, and, you know, getting into a home that's safe for you right now.
So when your company did my loan 25 years ago,
yeah,
should I have stayed at 10%, or did I do the right thing and refinance?
No, you've refinanced multiple times,
so there we
and
go.
That was a good thing. And I have myself. I've refinanced my own loans a couple of times, and you do. You take advantage when the market's right. And, you know, once you have that house and you're building equity, you have those opportunities. But if you stay as a renter forever, you're just never going to have that opportunity.
Fantastic.
Yeah.
Thank you so very
You're
much.
welcome.
Appreciate it. Guys, if you guys want to get a hold of me or Emelia, feel free. Our information is down below. Subscribe, click. We're here to help.
Here to help.
All right.
Thanks so
Take
much.
care.